Welcome to Taco Tuesday. Tonight we're talking about taxes. I'm going to give you a disclaimer up front. Um, I'm not a CPA, I'm not a tax professional. I'm not giving you tax advice tonight. I'm going to share some things that we do in our business, things that we write off. I'm going to refer you to a tax professional for any and all of your needs. My information, I'm a US consultant, so my information is relevant to US taxes, not Canadian taxes, not British taxes, not, I don't know, Spanish taxes, not Australian taxes. You guys get the idea. Okay. If you do not have an accountant, which is the most common thing I hear people say, well, either I do my own taxes, I go to the military base and have them do them for free, or I'm going to tell you, you are running a business and it is probably worth paying a professional to do your taxes. It is not that expensive. Okay. But so I'm giving this disclaimer. I'm not giving you tax advice. I'm not responsible for your tax return. I'm just going to share some tips. All right. So let's start with the fact that, and I know some of this is going to be review for you all. Some of it is going to be new for some of you, but I'm just going to really dumb it down and start at the basics. So you are not an employee of Sensi, okay? One of my biggest pet peeves is when people say they work for Sensi. You do not work for Sensi. You are an independent contractor. You are self-employed and you do not work for Sensi. You work for yourself. You run your own business. You are an independent contractor for Sensi. You're an independent consultant. That means they will issue you a 1099 in the US, called something different in other countries. They will issue you a 1099 in the US if you have earned $600 or more in commissions and awards for the year, because they're required by law to do that. That 1099 will post to the accounts tab of the workstation by January 31st in the US. I don't know what the deadlines are in other countries. I'm not going to try to speak to that. But in the US, January 31st, and that's the law. And I actually didn't look at the calendar. Like, I don't know if, I assume that has no bearing on whether the 31st falls on a weekend or whatever. I think that's just straight tax law, 31st. Okay, so you're an independent contractor. What does that mean? Number one, it means you're not an employee, like I said, of Sensi. You work for yourself. Number two, it means Sensi does not take taxes out. And I took some notes because I don't want to forget anything I want to tell you. Means Sensi does not take taxes out of your commission. They pay you a commission, and you, as an independent contractor, as an independent business owner, are responsible for filing your own taxes and paying those taxes to the state and the government and municipality or city if your area requires that as well. Okay. So January 31st in the US, 1099 on the accounts tab of the workstation. That's only if you receive $600 or more in commissions, in income. Let me just say in income. I'll break down what income is for the last calendar year. Okay. Now, what if you didn't earn $600 and you didn't get a 1099? I believe, and again, I'm not a tax professional, did not stay at a Holiday Inn last night either, but I do believe that the requirement is that you still are required to report all income regardless of how much you made. I know we have a couple tax experts on here. Is that right? Shake your head.
Yes, that's correct. Legally, you are supposed to, you are responsible of tracking and reporting your income, whether or not Cincy gives you documentation.
Okay. So how would you figure that out if you don't get a 1099? Well, there's this great thing called the pay statement on the workstation. It's on the account. It's on the main account tab as well. And you can view what your commission payouts were every month from the last year. Or if you just joined partway through the year during that time period. So what's going to be on, what is income is defined by what's going to be on your 1099. So I want to break that down because sometimes this is surprising to people. It's not, it's going to be your commission, any commission you've received, but it's also going to be if you earned any monthly awards that had a financial value to, like if you earned a product credit, a sensation, a shooting star trying to think what it's called, a shooting star trainer award. I don't think that's what it's called. But if you had someone in your front line that you personally recruited that hit shooting star and you got that $25 product credit, that's taxable income. Okay. So any monthly award like that, if you earned shooting star, sensational star, that's taxable income. If you earned any annual award, annual sales, annual mentor, that's taxable income. If you earned any incentive, whether it be an incentive trip or some other kind of incentive, that is taxable and will show up on your 1099. Now, that's not Sensi just trying to be mean or screw you. That is law. That is tax law. Okay. They are required to include that kind of thing. So that's the kind of thing that's going to show up on your 1099. Okay. I want to give you a couple notes or things that I think are important before I get into some deductions. You should be, I would highly, highly recommend, even if you aren't making a lot of money yet, you should be putting some of that commission back every single month for taxes. Now, some of you are going to say to me, I get a refund, and that's fantastic. I'm glad you get a refund, but if your income continues to grow, at some point, you will not get a refund or you will owe money. There are only so many deductions, even as your income goes up. There is no way I could possibly write off all of my income. Okay. And at some point, you will cross the threshold where you will, not get that refund and you may owe money. If you've put that money aside, that's fantastic. And then it's not like a big, oh my gosh, where am I going to come up with however much money, right? If you don't need it at the end of the year, great. Then you just have that money and it's like you just gave yourself your own tax refund, right? You put that money aside, you put, 10, 15, 20, 25. I've always taught 25% to put back. Some people say 20%. I've always taught 25%. And at the end of the year, if you don't need that money, well, that's just bonus in your pocket, right? You can put that back into your checking account. All right. What I recommend you do, so that's the number one thing. You should always be putting money back for taxes. If you don't need it, fantastic. It's a little unexpected bonus. But if you do, you've got it there for you. Number two, I think it is vitally important, even if you are brand new, that you do not commingle your personal finances with your business finances. Even if you are a hobbyist and this is just something fun to do, open up another checking account, open up another savings account. Even if you don't want to open a business account, which you can do as a sole proprietor, you can do that, not a problem. Like my accounts through Bank of America, not a problem, right? You can do that online. But even if you don't want to do that, just open up a second personal checking and savings account. Put that extra money into the savings account that's going to be your tax money, and then put your commission into the business account. That commission that you get on the 9th or 10th of the month, that is not your pay. That is what your business has earned for the month. Now you pay yourself from that, right? So you're going to pay whatever, you're going to figure out whatever your expenses are going to be for the month. And then whatever's left, you could pay yourself, right? You put your tax money aside. Oh, I've got my monthly subscription coming out. I get the Sun Warmer of the month. I spend about this much on postage, whatever the case may be. And then you're going to pay yourself whatever's left. And that money is going to go into your personal account. So you're going to transfer it from your business account into your personal account. You're going to give yourself a draw. Okay. Then the reason you do that, when you mingle your personal money and your Sensi money, number one, it's really hard to have an idea of how much you've made. Number two, it's much easier to spend family money on Sensi and not realize that you've had. And you should be spending the money you've earned on Sensi. And your Sensi money should bless your family. Your family money shouldn't pay for Sensi. Okay. Does that make sense? But the other thing is, at the end of the year, if you're really good, at the end of the week, when you reconcile your taxes, let's just pretend this is a perfect world. And every Friday morning, we all sit down for an hour, or Friday night and sit down for an hour, and we reconcile all of our business things for the week. Okay. I know that probably happens to like 0.005% of us. But if that happened, then you would just go to your business checking statement, and you would have your receipts here, and you would go to your business checking account, and everything would be there. And all of your expenses, or if you did it once a month, or if you slacked and waited to the whole end of the year, then you would only have one account you would have to go to get all of those expenses and deductions, because they would all be lumped in one place. And it wouldn't be like, so here's the conversation in previous years we've had in our house. Well, I'm going to have to do the USAA credit card statement, and then my Marine Fed account, then the Bank of America account, and oh, don't forget the Wells Fargo account. Okay. That's a whole lot of accounts to be trying to figure out where you had business expenses from. If you have one account that you use for business, it's very simple. It's just get that statement. You can export it to Excel if you want. You can just print it. You can upload it directly to QuickBooks, whatever method you're going to use, and it's all in one place. All right. So if you take nothing else, I think I've said this like 5 times in the past 6 months. If you take nothing else from this, open a separate bank account that you only use for your business. Now, if you're really good with your money and you're really financially responsible and you don't carry a credit card debt, and you're really good about paying off a balance on a credit card, maybe you want to get like a rewards credit card that gives you cash back, or a rewards card that gives you mileage, flight credit. Maybe you want to do that. But if you're someone that struggles with, you're potentially going to run up a big bill that you can't afford to pay, then definitely don't do that, because you don't want your business to go into debt, and you don't want your business to cause your family to go into debt. So number 4, keep good records. I'm going to share with you again a couple systems that we use, but what works for me won't necessarily work for you. You have to find a system that works for you. I don't care if that system means you take a shoebox and you put all the receipts in it, and once a month you pull them out and you categorize them, and then you print that bank statement, and okay, maybe you put in an Excel spreadsheet. Maybe you don't use an Excel spreadsheet, and maybe I think I printed one. Maybe you use something like this. It's just something really basic that you just are going to line item, the date, the name, purpose, the amount, and the category. And maybe you're going to do one of these every month. And then at the end of the month, you can tally it up. This is from the US. I'll get to that. This is from the Facebook tax group. Maybe that's your method. Maybe you're an Excel person and you want to use an Excel spreadsheet, and that's really easy for you. Maybe you want to use QuickBooks, and it'll automatically load that separate bank account into QuickBooks, and all of that will automatically convert, and you can do it all online. Okay, whatever method you use, I don't care. You have to find a method that works for you, though. My method won't necessarily work for you. All right. When we talk about keeping good records, one of the things that's easiest to not keep good records on is product that you use. I had someone that reached out to me within the last few weeks, and she asked me, I don't remember exactly what the question was, but it was something I had posted, and she was kind of questioning me on it. And she said, oh, I was told that I could never write off Scentsy product, that I could only write off things that I bought in my business that weren't Scentsy. I said, you can write off Scentsy product that you use in your Scentsy business. If you use a bar to make samples, if you use a dish soap to make samples, if you gift something to a customer, if you use it in a party, if you say you're doing a home party, or say you're doing a basket party and you put a bar in there, anything like that, products I have on my display, whatever, those are things you can write off. But she said, oh, that's not what my sponsor told me. Okay, so I want to make that very clear, but you have to keep records of that. So again, use whatever method you want. I know, can't remember who told me they keep a running tally on an order form all month. Someone told me they just, either print the order form in the workstation, or if you have the old ones that are multiple copies, they just each month have a new order form. And then every time they use a product, they write the date, the product, and then the price of it, and then what they used it for. I use a very simple sheet because I am kind of a paper person. And I've showed you all this before. This is in the super simple systems that we've posted on our page like 5 million times. I use just a very, very, very simple sheet. Okay, I'll tell you what it says. Month and year. It says demo product list, tax write-off tracker. Month, January, year 2021. Has a column for date, product used, what I used it for, the number of products that I used, and what the total is. So like Just Breathe pods. If I use 2 of them, I'd put 2 and then I'd put $20. If I used 1, it would be 1 pack, it'd be $10, right? You following me? And like I put in there what I used it for. Did I make samples with it? Did I put it in a basket party? Did I, whatever I used it for, that's what goes in the used for column. Okay. Very simple, because that's a system that I can pull this out every single day if I need it. And I have bars right here. I have pods right here that need to go on it, but they will sit on my desk until I physically put them in it. Okay. And then I can do what I need to do with them. So it holds me a little more accountable. But if you don't keep good records of the products that are used in your business, and I'm not talking personal use, used in your business, then you can't write them off. The other thing, if you got them for free with host rewards, you can't claim that you paid $10 for a pack of pods or $6 for a bar. If it was free, it was free. So if you are choosing, if you have free product, you might want to use that free product. This is just my personal opinion, Karen tip. You might want to use that free product for your personal use, right? And then you could write off what you've paid for and use that for your sampling or whatever. Okay. But you can't, if you are audited and you have a list and they say, okay, pull up in the workstation that Cocoa Lime bar. And you're like, oh, search Cocoa Lime. Oh yeah, I use my host rewards for that. They're like, sorry, you can't take that $6 deduction. That was free. Okay. And yes, there are different levels of, some of us are definitely audited a little more heavily or more likely to get audited than others. But you still want to make wise choices. You want your return to be audit proof, right? You want everything that you do to hold up, and good record keeping is part of that. As your income grows, you may need to pay quarterly taxes. If you are working with an accountant who, again, is not that expensive, they will let you know that kind of thing, so you're prepared for it. Okay. There is a really great Facebook group. It's where I got this sheet from. This is not what I use in my personal business, but I got this from. I will post this on the Scent Warriors group page. It is a US site only. Does not work for Canada, Australia, New Zealand, the UK. US tax dollars and cents, SCENTS. Will someone put that in the chat? US tax dollars and cents. Now, I will tell you, they are, you are not allowed to answer questions on that page. Thank you very much. You are not allowed to answer questions on that page. Only the admins can answer questions. I believe they all work for the IRS or previously worked for the IRS, right? And if you ask a question and you haven't searched for it, they might get a little ugly. So make sure you search for, do a search for whatever you're going to ask first. So, but really, really good information. They have all sorts of spreadsheets on there that you can use if you are a spreadsheet person, that you can use to make this super easy for you. Okay, so let me just go into a little bit more about how do you track it. I said I don't care what method you use, you just need to find a method. You want to create easy systems that work for you. If writing in something like this is not something you're going to do, you just have to find something that you are going to do. Okay, it doesn't matter what you do, you just have to find something you are going to do. Some people put all the receipts in shoebox, like I mentioned. It's probably the number one thing I hear people say. They put the receipts in a box. Okay, fine, if that works for you, but don't just leave them there. You have to do something with them. Some people will get the accordion files and they'll like label each category with, like one might say advertising, one might say supplies, one might say office supplies, whatever. And they drop the receipts in there. If that works for you, great. Some just use file folders and do that. Some use envelopes. It doesn't matter what system you use, just find a system that's going to work for you. I am a paper and pencil person. Steve is more an automated person. I paper and pencil. He Excel spreadsheets. Okay. The other thing that we do that makes it pretty easy, we use QuickBooks and we use the app. The app for QuickBooks, and I would recommend if you're just starting out with QuickBooks that you do the self-employed version. There is a fee for it. I can't remember how much. It's somewhere between like $10 and $15 a month, but that again is a write-off. That's a professional services fee. When you use QuickBooks and you keep track of it, it'll pull up all your expenses on your phone or your iPad or whatever you're using, and you can swipe one way for personal and swipe right. I don't remember which is personal, which is business, but I feel like it's like swipe right for personal, swipe left for business. Okay. And if you swipe left for business, then you assign it a category. And so say, for example, something like my Amy subscription, I can make that designated that it automatically every month will categorize that for me. So I don't have to go in and do that every month. Okay. Anything that I have that's like an ongoing subscription, it'll automatically categorize for me because I just set that up on my phone, and I am not tech savvy, and if I can do it, anyone can. The other thing that you can do with the QuickBooks app is you can take a picture of your receipts and it'll automatically upload them to the transaction. So you have them in your history attached to the transaction that link to your bank account. So it'll import all the data from your bank account, your business bank account, or your one that you're using for your business. And it'll let you swipe one way to, categorize the business, one way for personal if you have personal. And then you can take a picture of that receipt and it'll automatically upload it into the QuickBooks system. So everything is done. And then at the end of the year, you press one button and you've got your profit and loss statement and your taxes are done, if you've kept on top of it. Okay. It's pretty simple. It's definitely worth what it costs. I don't care what system you use, just find a system that works for you and run with it. Okay. You do need to keep your receipts and your records for your business deductions for 5 years at least. I know they used to say 7. The ladies on that page say 5 years. I don't know I don't know if the rules have changed on that or not. I want to go through a few things that you can take as deductions. Okay, this is not a all-inclusive list. I will tell you, I'm going to post these. Okay. This one from that page lists some of the categories even. Okay. So I'm going to go through and tell you some of the things that you can write off, some of them. If you have an accountant or someone that does your taxes, you can write that off. The cost of that, legal fees, that's called professional services, right? You can write those off. If you have membership fees, Amazon Prime, Costco, and you use those things in your business, that's a business expense, right? Now, if you use it one time in your business and 499 times in your personal life, you probably can't take 100% deduction on that, right? So kind of pay attention to that. Just use common sense. Any bank fees or bank charges, you can write those off. If you give any prizes or gifts or products to your host or your guests at parties, if you've tracked those, you can write those off. Car mileage, and we're going to come back to car mileage. Car mileage adds up, and you can write off any business-related car mileage, but we'll come back to that one. Cell phone. Now, if you have a cell phone and you use it for your business, but you also use it for your personal life and you don't have another phone, if you don't have a landline or whatever, then you cannot take 100% deduction on it. It used to be you could take 50%. I'm assuming that's still the case this year. If you have a landline or another line that you can use for your personal business, then you can take a higher deduction on it. But again, an accountant's going to know that and tell you, right? Charitable contributions or donations. If you do a fundraiser, right? If you, I donate product it's an in-kind donation. I donate product to a group called Hilton Head Heroes. It's a nonprofit locally that brings families in of kids that have pediatric cancer and gives them week stays in their house on the beach here. And it's a nonprofit. And so I provide the dish soap, the hand soap, some Scentsy buddies, some product, all that kind of thing for the house. That's an in-kind gift. It's an in-kind donation, and I write that off, the cost of that stuff. Um, anything you have that's branded. If you have that koozie or whatever, that cup, that tumbler, and it says Scentsy or Wax Boss, or you're using it for advertising purposes, that's a write-off. If you have those, if you wear your Scentsy shirts, that's a write-off. Now, if you go shopping and you buy this really amazing wardrobe to wear on your incentive trip, that is not a write-off. Okay. But if you've bought some Scentsy branded shirts, that's a write-off. Okay.
Can I ask a quick question there, Karen? If you were to buy an outfit, but you were to have someone put Scentsy on it, does that count as a write-off?
I would send you to your tax professional for that. I would think so. If it's branded, sure. I mean,
that's what because I've ordered some plain hoodies, but like £100 worth, and I'm going to put Scentsy on the back myself with the logo thing or Wax Boss or whatever. So I'm thinking I can write that off.
Are they for you?
Yes.
If you're going to use them to advertise your business, sure. Yeah.
Yeah.
Now, if you went to, like, I don't even think you guys probably have this in the UK. If you went to Nordstrom's or Saks or Neiman Marcus or somewhere like crazy expensive, and you bought like this ridiculous, like expensive, I don't know, I can't even think of an example. You bought something ridiculous expensive, and then you just had this little teeny Scentsy put on the, the bottom of it, probably not. That's probably a stretch. But yeah, I mean, within reason, if you're legit using it to brand your business, sure. If you go to a convention or a conference or a seminar, if you go to, like, let's talk about a non-COVID world where we go to reunion and we go to world tour and we go to a retreat or we go to whatever, that's a write-off. The cost of your admission to that, your entrance to that is a write-off. The cost of your lodging, your meals, any entertainment while you're there. Now, let me tell you, I don't know I know there have been some changes to the tax law, so I'm just going to tell you what I know pre-2020, 21, okay? Because I haven't discussed this with my accountant yet, because my stuff is almost ready. Not quite, almost ready. But in the past, it's been a 50% deduction on travel meals and travel entertainment, okay? Not 100%, just so you know. Now, if your spouse chooses to go with you and they have no part in your business and they're not actively involved in your business and they're going to go fishing instead of attending that conference with you, you cannot write them off. They have to be a legitimate part of your business. Okay. They have to be going to the event to participate in the event for your business. Basically, they have to have a valid reason to attend. Okay. If you use Square or PayPal's, you invoice through PayPal or Cash App or Venmo or any of these services that charge you a fee, a processing fee, a credit card fee, a transaction fee, anything like that, you can write off those fees. Okay. Let's see. Like demo warmers that are unsellable that you've used for parties, things like that, that falls under depreciation. You can write those off. Anything in your office. So Steve and Logan built my entire office. They built the furniture in here. They built this. They built the bookshelf. They built this. They built the desks, the big long desk with the piece coming out that you can't see. That's all a write-off. The laser printer that I use every day, that's a write-off. That if you bought technology this year, if you bought a computer or a laptop that you use in your business, write that off. Now, there are a couple different ways that you can choose to take the deduction, and you would want your accountant to tell you how to do that. Sometimes you write off the whole thing up front, and sometimes you depreciate over years. So that's a situation where you would want to. Now, if you bought a really nice computer because you are a gamer and you want to game on it, and maybe you'll log into your workstation once a month, you bought it to game, not for your business. Okay. Let's see. If you have bought downline gifts or team incentives, those are write-offs. If you subscribe to the Warmer of the Month, it's an advertising expense. If you have a PWS or a cross-border agreement, all of those subscriptions are write-offs. If you have any kind of entertainment that's business related, team meetings, a holiday party, little hands that went out for book club, it's a write-off. Okay. If you, I'm trying to figure out, I'm skipping a couple things because I think they're more confusing than that. We talked about fundraisers a little bit. If you do a fundraiser, now if you do a fundraiser, if they are not a nonprofit organization, then you probably would take that as an advertising expense or a marketing or advertising expense, right? If you did it for someone that wasn't a legitimate nonprofit, then you could still take a deduction, but that would be an advertising expense. So how's that an advertising expense? Because your product was branded, your marketing materials were branded. Okay. Food meals for customers. You go to Starbucks with a potential recruit. That's a write-off. I take you to dinner because you've promoted to director. That's a write-off. Let's see, home office. Now, I believe this has changed a little bit in 2020. So you can't quote me on this, but in the past, if you've had a dedicated workspace that you used solely for your business, you could take a home office deduction. Now, I think it's changed in two ways. I think there was a change that was made pre-COVID that actually kind of flipped that deduction a little bit. But then I believe with the CARES Act, there was a change that went kind of the other direction with it to give a little more flexibility in that. So again, this is why I'm going to encourage you to talk to a tax professional. Okay. But what does that mean? A space that you use exclusive. So let's say that your home is, I don't know, let's say that your home is, for the sake of math, let's say your home is 1,000 square feet. Okay. And let's say that you have a room or a space in your home that you use only for Scentsy, and it's 150 square feet. This will be easy math. Okay. Home is 1,000 square feet. Space you use for Scentsy is 150 square feet. It's dedicated space. You store your stock in it. You have your office in there. You do your work in there. There's no bed in there. You don't sleep in there. Your kid doesn't use it. It is literally, if the IRS came in, they would not see that there was any way that this was a space that was used for anything else. Okay. Then you've got your 15% of your home is used for your Scentsy business exclusively. Okay. So what does that mean? Well, there's a formula to the whole thing. But basically part of your mortgage interest would be deductible, about 15%. Your utilities, your cable, your internet, your electricity, all of those things would be about 15% deductible. Okay. It's a little more sophisticated, the process of how that works. If you come back and you say that 40% of your home is used exclusively for Scentsy, that's a pretty big flag. That's not gonna fly. I'll just tell you right now, right? You can't say that your kitchen is used for Scentsy if you cook in it. Okay. You can't say your bedroom is used for Scentsy if you sleep in it. But if you have a space that, even if it's a big walk-in closet, that you throw a table in and work out of, or that you keep your stock in, okay? And you know the square footage of that space. So that is, but it has to, again, be exclusively used for your business. Okay. Anything you use for shipping, any shipping expense, any mailing expense, that's a write-off. Envelopes, shipping supplies, postage, poly mailers, whatever, that's a write-off. Any marketing or advertising expense, anything you bought at the Scentsy Success Store, it's a write-off. Okay. I will tell you that a lot of people spend a lot of money in the Scentsy Success Store on things they don't really need. And if you're not making money, you shouldn't be spending money on it though. Okay. Office supplies. Oh, and we kind of talked about that. Computer, software, printer, scanner, fax machine. I don't know, do a lot of people use fax machines still? I don't think that's really popular. Office furniture, but the furniture should probably be depreciated. Okay. Sharpies, your favorite pen, your highlighters, your printer paper, your ink, all that stuff. If you're using it for your business, it's a write-off. Now, if you shop somewhere exclusively like Staples or Office Depot and you have their rewards program, you can print a summary at the end of the year of how much you spent and it's categorized. Now, if you're buying this at Walmart and buying this at Target and buying this at Staples and then heading over to Office Max for this, it's going to be a little more complicated. But if you dedicate all your shopping to one way, it makes it a little easier. Okay. Printing, if you paid to have something printed, it's a write-off if you used it in your business. Taxes, licenses, parking tolls and fees. You go to an event, you have to pay for parking or you had to take a toll road to get there. You can write that off. Anything that you buy for your display or for your parties or for an event that you do, booth fees for an event, you can write that off. Any other kind of technology. Now, I bought a silhouette this year and I legit have only used it for business. The only thing I've used that silhouette for is to make those bags that I did for my 12 days of Christmas. And to be honest, I can't see that I'm going to use it for anything other than business. Every project that I can think of that I would use that silhouette for is business related. So I'm going to take that as a write-off. Now, if you buy a Peloton and you ride it with Scentsy people, that's a little questionable. I know some people are trying that this year. It's a little questionable in my eyes. Okay. Let's see what else. Any app, your Canva subscription, Amy subscription, anything like that, anything that that you use in any capacity to run your business. So that's just kind of the tip of the iceberg. There's a lot more. I do want to go to mileage a little bit. There are some requirements for mileage. If in the US, if you're going to write your mileage off, they do request, you are required to have a starting year mileage. So that's why I tell you guys the end of the year, January 1st, make sure you've written down your mileage. Okay. Now, a little different this year because most travel is not as prevalent as it was. If you haven't gotten your mileage, go get your mileage. I mean, you're going to have missed out on a little bit, but it's not the end of the world. There's two ways that you can track your mileage. You can do a handwritten ledger of it. So you just get a notebook and you put it in the car and you got your starting mileage for the year. And every time you get in the car to make a trip that has to do with Scentsy, you went to Target to buy something from the dollar spot that you're going to use in your business. You went to Staples and you bought ink. You went to a customer's house and did a porch drop off. Anything. You drove to Scentsy family reunion, whatever. Obviously you didn't drive last year, but you're following me. Anything that you're doing like that. Every time you get in the car to do anything that has to do with your Scentsy business, you drove to Starbucks to meet a potential recruit to talk about Scentsy or a team member. You're going to write down the date, your starting mileage at the start of the trip, your ending mileage at the end of the trip, where you went, why, like Staples, ink, and the total mileage for the trip. And you're going to just tally it up. Okay. If you're a paper and pen person and you are dedicated and you one of the things that that might be helpful is you literally, when you get out of your car, you put it in the driver's seat. So when you get in the car, you have to pick it up so that you don't sit on it. Okay. Now, if you're an app person, you do something like Mile IQ. It's MILE-IQ, and it tracks your mileage for you. Every time you get in the car and you start driving, it tracks it. It tracks your trip. It's a little creepy, but it plots your trip to and from everywhere you go. You can go in once a day, once a week, once a month, or don't wait till the end of the year because you'd have way too many trips. But you can go in and you can you can same thing like QuickBooks. Swipe one way for personal, swipe the other way for business, and you can put in the purpose of the trip. Okay. And it'll automatically track your mileage. The cool thing about it is you can every week, every month, or at the end of the year, you can get a report of what your mileage was. So it takes care of all of it for you. Now, QuickBooks, if you do QuickBooks Self-Employed, it also has a mileage option. I just happen to like Mile IQ a little more for the mileage. So, but those are your options. Mileage can really, really be a huge deduction. If you do shipping, if you ship a lot of stuff out, which I know in COVID, a lot of us were shipping a lot of things out. If you use something like Pirate Ship or stamps.com, it will track your shipping for you. So you can go in at the end of the month, at the end of the year, whatever, and it will give you your mileage, your shipping report. It'll tell you how much you spent on shipping. It'll break it down by transaction, where they went. You can make it as detailed as you want. Now, what it will not track is any postage for stamps. Stamps.com, if you buy their stamps, you can do that. But Pirate Ship is just going to be for packages. So if you went and bought postcard stamps or you went and bought regular stamps at the post office, you're going to have to add that in. Okay. But it makes it a lot easier to have all of my shipping of packages all in one spot on Pirate Ship. So, and I love that because some of those things that I forget also, if you have large medical expenses, we in our family have very large medical expenses. And if I do something like, we get all of our prescriptions at Walgreens because that's who TRICARE authorizes now. Was CVS for a while, now it's Walgreens. At the end of the year, I can go into the Walgreens app and I can print by person or by family all of what we paid for all of our prescriptions. So if you take a medical deduction, it tracks all that stuff for you too. So if you take advantage of some of these things, even if you just print them out monthly, if you don't trust the system to wait an entire year, if you just print them out monthly, it's all there for you. Okay. What else did I have for you? I think that was about it. Again, disclaimer, I'm not a tax professional. You need to find a system that works for you. If in doubt, talk to a professional. What questions do you guys have?
Karen.
Yeah.
You mentioned medical deductions. Does that have anything to do with Sensi, or is that just
No,
personal?
that's personal. That's personal.
Okay. Thank you.
No, we just have a lot of personal medical expenses. So, but I know that's something that a lot of people do take a deduction for. So, but I find that the more I can use, the more that I can simplify where I shop and how I shop, or what services I use, the more these companies and these brands offer these services that make it a lot easier for me once a month or once a year to download this. Otherwise, and I do save all of my prescription receipts, but I have 500 of them, actually I probably have more than that. So they're not mine, they're Luke's, but I mean, 15 different prescriptions probably every month, that's minimum. That's not including after hospitalizations and that kind of thing. So it just makes it a lot easier. Like if I do all of my business supplies at Staples or Amazon, makes it a lot easier. I can just go into Staples and I can download my office supply expense. So what questions do you guys have? Wi-Fi, yes.
I have a question about the shipping end of it.
Yeah.
If I ship something to Canada and they paid me to ship it to them, that can't be deducted though, correct?
Nope, because you've
We're
been
getting,
paid for
if you're
it.
getting
Not-
reimbursed.
If you're getting reimbursed for it, cannot be.
Okay, and the other thing is, most of the pharmacies, if you go up to the Acme, ShopRite, everybody up here does it. If you go up and ask them before January 31st of this month for your printouts, they will print it out per person for your household.
That's
So
fantastic.
itemized, if you do the itemized, then you need the medical.
I love it. I didn't know that. I love it.
Yep.
I love it, love it. No, so with shipping and taxes, if you aren't reimbursed for it, and if you go to that US tax dollars and cents page, it's like the number one answer. If you were not reimbursed for shipping, you can claim it. If you were not reimbursed for sales tax, you can claim it. So say you have a customer and you told her, say she ordered a 6-pack of bars and you told her it was $30 and you ate the sales tax on it. Okay. You can write off that sales tax if she did not pay you. Now, if she's paid you the sales tax on it, you can't write off the sales tax because she paid you for it. She reimbursed you for it. So what other, okay, let's see. Questions from the chat. I think my tax people are doing a good job answering them, but let's see.